Eric Mother with Mother.com with the US market analysis for the weekend of April 2nd and April 3rd, 2016. With about 10 minutes to go here, Friday, we are looking at markets close to the highs of the day. So let's take a look at the charts and see how the charts are forming up as we begin a fresh month of April 2016. And what we have here on the Nasdaq is interesting because after a nice gain for the week for the Nasdaq, up about 3%, let's take a look at the weekly charts here, which surprisingly don't show a lot of action to the upside. In fact, the market is coming back to test some two lines of resistance, which is surprising. You'd think the market would be breaking out. But if you take a look at the weekly, what the Nasdaq is doing this week is coming back to test the previous line of resistance that we've been drawing. So here we had a break off the highs of 2015, somewhere around there, and we can draw a line from there, which should be somewhere around there. So you can see that pretty much what we've done this past week is come back to test that line. The last time we came to that level and stalled was the highs of November and October. So those highs came exactly around the red line. We hit that red line in December for the highs there on a weekly closing basis, and here we are seeing that we are also coming back and touching that same line. So clearly market bulls would like the market to eventually move above that line of resistance. So if you're a market bull, you'd like to see the market clear that resistance by moving higher. Otherwise, those who would like the market to move lower would like to see resistance on the red line and the market eventually pulling back. So I guess we'll have to see which way the market decides to go, but for now, on the weekly for the Nasdaq, we are coming back to test that line of resistance. Anything showing resistance here would suggest the next swing trade is down. Otherwise, if we can clear that line, that's good for markets. Take a look at 3 months of weekly data, and we can see here that there's a line connecting recent RSI highs. So if you draw the line like that, even after this week's nice gain, we are looking at markets coming back to test the top side of the weekly RSI resistance line. The last time we hit that line was during the highs of October, November, which was during this period. So I guess again, here, market bears would like to see resistance and a move lower, yet market bulls would like the market to finally clear that troublesome line by moving above it. But in conclusion here, as far as the Nasdaq is concerned, pretty much coming back to test this line even after a nice week, which the market rallied about 3%, but coming back again to test that same line, which would become a problem if the market cannot clear that line of resistance. On the daily, things look a little bit better for the Nasdaq, having cleared back above the 200-day moving average. We are also above a recent daily closing high, which the market has moved above that threshold and continues to hold above that level. The level to watch there is as long as the Nasdaq is holding above 4821.66, which is this previous daily closing high. So as long as the Nasdaq is above that, let's give the market the benefit of the doubt. Also, we can see here that there was a line that was previously a problem off the highs. There's a line here. As you can see, the market had moved below that line here for the highs there, and we broke through the red line here, which began these highs of November highs. We hit that level there at the end of December, or at least at the highs of December for the highs there, but now we are above that line of resistance. So net, as long as the market is above that red line, it's above the 200-day moving average, it's above 4821.66. Things look good. And also, as long as the daily continues to hold above 69.1, one has to give the market the benefit of the doubt. And in terms of benefit of the doubt, I mean one has to give the market the benefit of the doubt that the market continues acting well. At the very least, the market should be stable. Let's take a look at the Dow weekly. And here we can see some type of evidence that the market is doing its best to break out. Take a look at the line connecting RSI highs on the weekly. So right now we see a slight movement above that blue line, which is good for market bulls. As long as that is holding, the market should have a chance of moving higher. That looks good. And also we are slightly above the previous resistance. So let me draw that again. So right now we are coming back and we seem to be wanting to move above that resistance line there, which is good. And also we are slightly above the previous break point of the highs here. Not by much. In fact, I can draw it a little bit lower, something like that. So we are above those two lines, and I think as long as the market is above those two lines, we can assume that the market is now doing its best to start repairing and could probably be setting up to move higher, as long as it is above those two lines, which have been a problem. The last time those two lines were resistance was here for the highs of October, November, December time period. So right now anything above that would be bullish. Also take a look at the channel in terms of the weekly closing highs, and here you can just draw it something like that. We seem to be above this as of this week. The market is breaking out, and that's good action. And as long as the market is above that trend line on the price on the weekly, and also showing signs of moving above RSI resistance levels as discussed, we have to assume that the market is looking okay until it moves back below those resistance lines. Also, if we take a look at a 1 year daily, in fact a 1 year weekly, so 1 year weekly for the Dow, you'll see that if you take the weekly closing highs over the past year or so, you can draw a trend line. You should look something like that, which connects nicely with close of about 2 weeks ago right there. So right now we are seeing the market jump above that trend line, which is good in terms of bullish action. So as long as the market is above that well-defined trend line, or as long as the Dow is holding above this close here from about 2-3 weeks ago, the level to watch there is if the Dow can continue holding above 17,602.30. That's a breakout on the weekly. Looks good because the market is clearing the resistance line and also clearing the weekly closing high from a couple of weeks ago. So given all that, we have to give the market the benefit of the doubt until such a time as the breakouts fail. For now, short-term breakouts seem to be taking place, and we have to respect the potential for upside. If there is a problem with the Dow chart, it's probably one can find that at the hourly chart. And here I am using RSI period of 26, just in case it looks a little bit different from your chart. So RSI period of 26, and what we have here is market's been making higher highs here, here, and here. While that was taking place, you can see that the RSI pretty much is still holding ground on this line here. So there's negative divergence, and that could set the market up for a pullback if this line is not violated to the upside. So without a breakout on this line, this negative divergence, as the market was improving here in price, might suggest that short term it would make sense for there to be some type of a pullback. Now, while the market was having a good move on Friday, we can see that the Dow Transports was down about 0.7%, and here the risk here is that the market could slide back below 50 on its monthly time frame. Keep in mind that the Dow Transport had a strong month here in the month of March as the monthly RSI moved above 50. Now we have to be sensitive to the idea that if the market cracks back below 50 on the monthly time scale, expect there to be a big down month, and that's a risk we have to watch for. Here the Dow Transport's trading at 51.63 on the monthly RSI. Anything below 50 would be a bearish move whenever it moves below that threshold on a monthly basis. Now if you take a look at the weekly chart for the Dow Transports, one can notice that the Dow Transports don't look very hot right now. In fact, keep in mind, after a very strong move here where we had 9 straight positive closes on a weekly basis, we've pulled back the last 2 weeks. Take a look at the weekly chart RSI and you see some type of resistance from the top side. So there's a line connecting RSI highs going back to 2014, and recently we hit that line. So that's one layer of resistance. The other one comes from the break off the highs, and that break off the highs was from the break of 2014 2015 highs. The RSI broke down here. That break in the RSI brought the market off the highs there, and so we can draw a line from there. And as of right now, over the last 2 weeks, we hit that line and now we are stalling. In fact, let me draw that on a fresh chart. So we broke down here on the RSI, draw a line from there, and you can see we hit that, and since then the Dow Transports are stalling. So maybe the Dow Transports could be one of the first markets to start pulling back after a very strong move off the lows here. Probably the next swing trade is to the downside based on those two lines, the uniformity resistance line and the topside RSI resistance line. So those two lines are a problem. Until the market can clear those two lines, one can continue expecting a pullback as far as the Dow Transports are concerned. On the S&P 500 weekly, let's continue watching the top side here of the weekly RSI. As long as the market is holding above that blue line, that's a sign of a market that wants to go higher. Just keep in mind that if we stall back below that blue line, then all this was a trap. So we are still waiting for that to play out. Again, if the market can hold above the topside resistance line on the weekly RSI, and also if the market can hold above the previous break line, which was a problem late last year. So I'm talking about this break point here in May. That break in May brought the market off the closing highs on a weekly basis for the SPX. So now if we can hold above that red line, and keep in mind we are still trading around that level. If we can hold above that red line, that's good for the market bulls. Otherwise, if we can't move above those two lines, and if we stall back below those two lines, then that would be setting up for the next swing trade, which would be lower. So above the blue lines or above the two lines is bullish. Any movement showing resistance on the two lines would be bearish on a week-to-week basis. On the S&P 500 daily, it needs to hold above the recent daily closing high of 20,051.60. Anything above that pretty much is bullish for the market. Let's give the market the benefit of the doubt to move higher. Also, as long as the daily RSI continues to hold above 69.1, that's a market that should continue being strong or at least stable. So anything above 69.1 on the daily RSI is a sign of a strength. And again, if you're looking for something that could give you reason why the market could stall, it comes on the 30-minute chart and also on the hourly for the SPX. Here we made higher highs in price over the last couple of days, but yet the RSI really has not moved higher. So you can see that continues to be some type of negative divergence, and as long as the market is showing negative divergence, this move here is a little bit on the suspect side. But those waiting for true downside momentum can wait until the market breaks through this support line. As you can see, even off the lows of Friday, the market held on that line there. So if you truly want to wait for a period when the market looks like it is breaking down, the market would have to break this downside support line, which has been support throughout most of the lows. As you can see, it touched the recent lows here and held support during these lows here, came again and touched the same line during the lows there. So if you're waiting for the market to break down, it might make sense to wait for the market to move below this line of support, which has been keeping the market at least with an upward trend. If you take a look at the S&P 500, we can see a slight higher high here, but we haven't seen a higher high on the RSI. That could be short-term problem if the market doesn't move above this line of resistance. But also importantly, take note of the fact that off the lows here of mid-February, this is where the market started moving higher. So this movement here on the 30-minute chart for the SPX, you can draw a line from there, which happens to be somewhere around there. You can see that since then, the market has hit that line with uniform action for the lows there. Perfect entry. We came again and touched it here a couple days ago for the lows there. So as long as the SPX is bouncing nicely on this line, one can assume that net the market should be bullish, or at the very least the market should be stable. So the hourly charts here show that lots of support on the downside, which again, if you go back to the hourly chart for the SPX, simple line connecting RSI lows has been holding the market together, and until we can break through this line on the downside, so any break through that blue line could be a tell that the market is due for a pullback. Otherwise, as long as we are holding above this blue line, the market should be generally okay. And keep in mind, there's an argument that can be made that the market could actually be setting up to make a move to all-time highs based on the long-term data going back to 1990 on the monthly chart for the S&P 500. You'll notice here that every time we bounce on the 50 RSI level, as you can see here in 1990 off the lows, the market went to all-time highs and recorded new highs. We bounced off the 50 here during the 94-95 period, and again the market went to record new highs. We came close here and held above the 50 for the lows of 98. The market would go on to make new highs. We bounced off the 50 here and back above it with uniform action. The market would go on to record new highs. We held below 50 and back above it with uniform action for the lows of 2011. Again, the market went to new highs. So over the last couple of months, we've hit this 50 level twice, in late 2015 and here in early 2016, suggesting that it is not out of the realm of possibility that the market eventually goes on to record fresh all-time highs. So the monthly charts look okay as long as the market is bouncing back above the 50, even opens up the possibility of markets moving to fresh highs, and that's the risk if you are bearish, that the market could actually be okay. And again, in conclusion here, what the market is going to do short term is whether it can hold above the weekly lines of support or breakout. So on the SPX, short term, it needs to stay above this line of potential resistance or breakout, and it also needs to stay above the previous break line that we discussed. So it needs to be above this line. So the market needs to be above those two lines to continue moving higher. Otherwise, resistance on those two lines could suggest that the next swing trade is down, even though, as discussed, long-term monthly charts look okay as of right now. Eric Muathe, Muathe.com. Good luck, peace, and blessings. Enjoy your weekend. I am out.